Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a phenomenal day. Let's take another look here at Bitcoin, see what's going on. All the profits from yesterday wiped away in the last 2 hours. Basically a very standard situation, okay folks? So this is nothing to write home about, but it's also not surprising either, okay? So again, we're just gonna take a quick look at the macro, kind of see what's going on. Just to quickly touch on this here, we are breaking down or free from this rising wedge pattern. Generally speaking, you do see further downside because of that. I wouldn't say we're gonna just drop really hard because of this one thing, but it is interesting that we are dropping below this current trend after rejecting bearishly off of that ascending trend. Okay, so again, just a little something there, but once more, we don't necessarily take take trades based on consolation, or in this case, some little outlier. We want to look at everything and kind of verify. Quickly to congratulate our community here, we got some nice profits coming in here on our plus bot. Things are pretty good. In fact, if you take a quick look here, we are pretty heavy on shorts, and majority of them are all in profit and soon to secure profit. So good stuff there. Generally speaking, it's just an automated trading bot that I have that you can kind of follow and make some passive income. It's not phenomenal because we did take a little bit of a red day yesterday, but again, we are up about 270 in the last week's worth of trading roughly. But again, you're going to find some losses here and there. Yesterday, some of those shorts got stopped out, but at this point, they're doing pretty well. Anyways, cool stuff there. And then obviously we took a nice long on SUI yesterday and secured some profits as well from Litecoin. So let's take a quick back and look here at Bitcoin. So what's going on here? What's the deal? Well, first of all, we still got that pretty large, massive gaping hole there at about 94,500. As we get closer to it, the more likelihood we have to sweep that level. So again, as per usual, 96,000 seems to be that little barometer where the price action continues to contract to that level. The more we test that, the more likely we are to break. Keep in mind, we keep retesting 98,000 too, so that you could argue the same situation to the upside, but we're closer technically to that lower range, or we have more to at the lower range here, incentivizing the price to go lower. So just keep in mind now that we have this momentum to the downside, I wouldn't be surprised if we see a quick run down to the 94K range. So just consider that. Also, if you can see here, even though yesterday we saw some nice profits from small coins, we took again that SUI long, for example, that was an outlier. Majority of the market was looking green, but that one broke a lot of key level resistances and it made sense. However, Bitcoin, it didn't make any sense, and it still doesn't to take a long, right? Look at this liquidation delta. We got way too many shorts in the market. Granted, that number's been high for a while now. We've seen about 4 days of consecutive bearish divergence, or just bearish delta, and that kind of incentivizes the price to go lower or to stay lower. However, you usually see some type of short squeeze when that occurs too. If it stays too low for too long, then that will naturally reverse itself. Market makers love to destroy, that handful of shorts, if you will. Taking a look at this here, though, this gives us some pause, but also some incentive too. In other words, we can see that we got some support at 96,000 based on open interest. This is where people are very interested in opening positions. That's an easy way to understand it. However, there's tons of open interest above us, reinforcing more resistance than support. Okay, so that just kind of reiterates the fact that we are still in a descending trend. Until that discontinues, we got to presume it will continue. Okay, that's the general idea. So the daily time frame. What do we look at here? Well, we want to look at some moving averages and kind of recognize that we're, that confluence I mentioned yesterday at the 98 to 102K range. That's a very rough estimate, maybe more so like 98 to 100,000. We can see that resistance with both the moving averages, some previous areas of resistance. You can see 1, 2, 3, almost 4 to 5 attempts at the last 7 days to try to break that 98K range and unsuccessful. So just kind of reinforcing that resistance. You could also argue the same thing with 96,000. Look at these candles. This is stinking. This is ridiculously aggressive and outrageous. You don't normally see this kind of price action. In other words, generally speaking, when you see doji candles, 2, 3 tops. We saw 4 doji candles followed by an aggressive green candle and now a bearish engulfing candle today. What do you call that? You call that untradeable, or not desirable trading conditions, unless you're trading in a range. And once more, swing traders generally don't swing trade in ranges. They look for those breakouts, which is why you're seeing less opportunity in the market if you are swing trading. Granted, day trading is a different story. Once more, our plus bot's killing it for the most part, and there's reasons why that's successful, because it's just tight margins. Little 1 to 2% movements on 5x leverage, so you're looking at 5 to 7% movements at a time. Okay, instead of these 20% take profit targets I like to look for on a 5x leverage trade. So again, Different stories, of course, but generally speaking, this is abysmal trading conditions specifically for swing trading in general. The last month has pretty much been like that, though. Either way, that shouldn't last forever, but that is par for the course right now. Under 50 on the RSI, money flow index is low. Stochastic continues to swing up and down, just giving us all sorts of false positives. But for the most part, the only thing that is consistent here is there's significant resistance between 98 to 100,000. So I've talked to my community about this quite a lot until we're blue in the face, just kind of reiterating and reaffirming that we are in a position right now where it's best not to take any type of longs on Bitcoin until we break free from that threshold. Same thing with altcoins too, even though they did pretty well yesterday. For the most part, every time there's something good and positive, Bitcoin gets rejected and altcoins 2 to 3x to the downside. It's just that natural capitulation that we're seeing pretty consistent right now. Now, granted, a lot of altcoins are doing fairly well, all things considered. Bitcoin dominance is technically down in the last 24 hours, so there's that. But once more, it's not monumental enough to really warrant any kind of like higher position and or potentially leverage trade. Okay, so just something to be mindful of there. All right, so let's take a quick look at a couple of other confirming factors. We're now back under 50 on the RSI. Again, fake out, false positive, whatever you want to call it, it's consistent. Every time there's some kind of awesome, type of break of a trend, it's like, all right, hooray, we broke our descending trend line. Just kidding. The market makers do their thing. It's pretty vile and vicious when you think about it, but it's all about that money at the end of the day, right? Obviously, we're chasing that too, but we need to kind of get on track with them. Right now, they're all about just hammering those support levels to reject out any late shorts and late longs. You have to pretty much buy every bottom and short every top for the moment right now to have success. And that's just not necessarily a good trading strategy, again, from a larger holding time frame position, right? If you are day trading, different story altogether. But once more, from a swing trader's perspective, these are subpar conditions to say the least. Let's quickly look here at the hourly. This does kind of confirm that we're back below the cloud, lagging span sprinkler. Just so many false positives. I mean, every time it's like, oh great, we've broken out. Price goes down. Oh no, we're gonna drop lower. Price goes up. It's just constant rinse and repeat. It's ridiculous. So the best strategy you can have right now is to buy each dip and to sell each top. Now, where those tops are, it's hard to say specifically because we are working ourselves into a descending type of channel. Let's see if I can maybe pull up a different chart to give us better perspective here. Because you can kind of see this, we're still establishing lower lows and lower highs, right? Now, generally, these kind of trading patterns do break to the upside, but every time we retest the lower high, we get rejected. So until we officially close above this guy or above this guy now or above that guy, there's no reason to really take a trade, at least again to the upside. Most people are wanting to break out trade, and that's just not the strategy right now because we've seen so many false breakouts. It's getting ridiculous. So again, it's exactly why I'd like to reiterate not breakout trading, and just in general right now, probably best to be patient and hang out on the sidelines. But what we want to look at next, and we'll keep an eye on, is just this continued pattern, because generally speaking, when you work yourself into a type of channel like this, it's either a bull flag or a descending wedge or falling wedge, and those type of things typically break to the upside, right? So we're starting to build more and more support at the $95,000 to $96,000 range. However, again, the same problem occurs. The more you test that support level, the more likely it is to break too. So really, it's a flip of a coin as far as which direction we're going to break out in. That's really the bottom line. So I know it sucks. It's not awesome. But this is standard trading, folks. Unfortunately, right now, this is par for the course, and you just kind of got to get on board or maybe take a break. Because unfortunately, I don't see it correcting itself anytime soon. We could very well be in the same situation as last year, for example, where we had this massive falling wedge between 60 and 74,000, and took 7 months to break free from that. And we're only about 2 months into this little channel here, so. That's what it is. All right, I'll post a playout chart in our Twitter, Telegram, Discord, update some scenarios here, of course, and we'll go from there. Hope you all have a good rest of your day. We'll look forward to seeing you next one. Take care.